What do you think about the Mag 7, the Great 8, the AI bubble, as it were?
What bubble?
Yeah, that's exactly what I was wondering.
Look, we don't think that we're in a bubble. Yes, there's a lot of questions around, vendor finances and circularity of some of these deals. But I think it's, again, a reflection that the demand is there and the supply isn't. And so the fact that you have companies investing into each other helps to broaden that ecosystem. And when you think about it, at the end of the day, this is 13% or something of NVIDIA's, revenues. Not a huge thing. And again, going back to the fact that much of the CapEx is still being financed by the large four hyperscalers, right? These companies still have very strong cash flows, even after CapEx. They're looking for cash flows this year of over $200 billion. That's very important to remember, that it's not heavily debt financed. It's not all vendor financing. And the fact that you had a pretty solid earnings season so far, you heard from the likes of TSMC that the fact that the demand still remains strong, much stronger than they even thought 3 months ago. And the fact that the tokens compute is increasing at exponential rates.
And you still think NVIDIA is a buy here?
There is no question in my mind it's a buy here, because the chips, the way this has to work, 86-7% of the market share, the next generation is already out there, and Jensen Huang knows exactly what he's doing.
So you're looking at Blackwell, then you're looking at Rubin, and then you're looking at the very next ones, and there's this old saying on Wall Street, trees don't grow to the sky, but trees aren't stocks, right? These are companies,
Bingo.
And they evolve, and so what about other parts of the AI story, though? Are you concerned? The circular financing and things like that?
Well, the circular trading that everybody's talking about is very different than the circular trading of old. There's real revenue, real performance objectives, real stock ownership.
Where does the trillions of dollars come from?
In terms of AI,
yeah,
it's the ancillary spending. It's going to be the more efficient gas station, the more efficient revenue, the margin expansion that comes
But like
from
OpenAI themselves, they're like, okay, yeah, they're just cutting deals with everyone. Like I had a cousin who did that, but he went to jail. It's called cutting checks, right? But they're like, they've cut $1 trillion in deals, and people say, where do you get the cash from?
Well, they have to do the deals because this is for all the marbles. If they don't, they won't survive. Every business on the planet will adapt, adopt, or die, Charles. So where the money comes from is earnings, margins, revenue expansion, units sold, better cures, better medicine. The use cases have expanded 100-fold.
I think the biggest risk I see is that the return on the hyperscaler CapEx is so good they raise their CapEx even more. And so the school of people that are out there that I'll profile by saying older value investors have been more skeptical of AI productivity than younger growth investors. Obviously, there's exceptions, but I'd say that's how I'd cluster the group that I talk to. And I think the older value investors would say the return's obviously not that great, the CapEx is crazy, ultimately that's gonna be bad. They may be right for the wrong reasons if the CapEx goes up. I think it's more likely the return is awesome for a while, and that the companies want to spend more CapEx, take the cash flows down to zero or negative, and so you could get a little kind of freak out on that. But I think ultimately you're going to be back to this stuff works and it's good, and things can go higher.
What about speaking of low expectations, you say CapEx expectations are too low from both Google and Amazon, which is an amazing thing to say considering the size of the numbers we're already talking about.
I mean, you look at the street numbers for CapEx for those two, Scott. Google, it's about 12% expected growth for next year's CapEx. Amazon's even lower. It's high single digits. It's almost unbelievable. How could analysts sort of expect this? But I think the reality is if you look kind of more at Meta, that's probably a better benchmark, and they're going to be growing kind of strong double digits, probably something like 30 to 40%. And I think you'll see Google and Amazon both. It might not happen this call. They might sort of just indicate, right, that they're going to continue to spend in this CapEx boom. But certainly as we get into Q4 earnings and projections for next year, I think those numbers need to go up significantly. And that's good for companies like NVIDIA and TSM, both of which we also own.
Would you stay with, I know you don't, it does look to me from your at least your top holdings that you're very exposed to some of these other power names for AI, whether it's Vistra or Eaton, GE Vernova. I don't know if you own them or not, just not in enough scale to get to the top holdings. Do you think that trade continues to work, or is it ahead of itself?
We have owned some of those names, particularly Vistra and GE Vernova in the past. We don't right now. And the concern I have is, everybody's talking about AI bubble, kind of where are we? Are we near the top? For what it's worth, I think we're probably in 1997. in the AI trade right now, but I think there are components of the trade and things that are kind of on the periphery, particularly around nuclear and some of the energy plays, and then also quantum. That feels more like we're in 1999. And so the energy stuff, as important as it is and as topical as it is kind of the bottleneck to some of these data center build-outs that we have right now. I do think a lot of that seems to be priced in the stocks, and I would rather own the hardware and the software players than energy right now.
And those artificial intelligence infrastructure investments continue to drive this economy. So we're looking towards those sorts of investments, not just the semiconductors, but the whole stack. That means you need to be able to collect and process the data, store it, protect it, getting into communication services with the hyperscalers, and then getting into the industrial companies and the utilities, because we have to have the power and the equipment to get those investments processed and to get that data processed. So it's a large secular trend that we think still is going to drive this market into year end.
So you are not scared off by the circularity, so to speak, of what people have been talking about as far as just a little bit of worry seeping into the AI trade, and that is that so many of the big hyperscalers are leaning on the oracles of the world. OpenAI is the one, as we like to say, sort of that load-bearing wall through all of this, and you're still comfortable with the hundreds of billions of dollars being spent and not as much revenue coming in just yet.
Yeah, no, we absolutely are, right? We're really moving from that first phase of getting artificial intelligence built to getting it used, right? And that's the next phase we're starting to see. That kind of takes us to the second notion we have. While healthcare is probably the worst or second worst performing sector in the S&P 500 so far this year, there are certain opportunities there that are opening up because they're using artificial intelligence, right? They're able to get more through drug discovery, able to leverage that to improve their earnings. And so within healthcare, we wouldn't say the sector overall is interesting, but we would look for those specific opportunities in healthcare that are being driven by that kind of next level of opportunity here.
We keep hearing these stories one after another, these multi-billion-dollar deals, by OpenAI at the center of all of them, buying up just about every bit of capacity for energy, for semiconductors, for infrastructure. And you say this AI thing is really taking off. And then on the other side, there's been this narrative that, hey, maybe this is a bubble. Maybe these earnings aren't going to be as good as we think. Maybe the consumption isn't going to be as broad. And we're going to run into the situation where we built all this infrastructure and we've got these ghost cities. So this earnings, in my opinion, is going to be where we see that this is very real. And this is what we need to keep this bull market going. We need to hear from Microsoft, from Google, from Amazon, that their cloud businesses are accelerating. And it's funny that Oracle had this really bad day today, but Oracle showed a, 75% CAGR growth expectation over the next 5 years with their OCI business. So this just goes to show how big expectations are, especially after these OpenAI deals, but also how sensitive investors are to anything that's imperfect.
I am curious though, Dan. I mean, when we talk about the AI story, at least as a trade, so much of it has been focused on the top line growth. The idea that you have this huge CapEx spend, obviously that's driving huge jumps in revenue. There's been questions, as you know, particularly with Oracle over the last couple of days, concerns about what the actual margins or profitability on some of these investments are or will be. Does that give you concern?
We have to build the factories of the future. We know that as they build, and we heard CEO of Oracle, Clay Magouyrk, talk about as they continue to build with each one, they get more efficient, they get more profitable. There are some companies making a lot of money. We know this because it's been the case with NVIDIA. We also know that there's clear winners. I continue to say TSMC wins pretty much no matter what, unless this thing comes to a screeching halt. Some of the other areas, though, where hyperscalers and some of these neo clouds, there's these new sort of energy mining companies, they're all really exciting because we see all this demand for the capacity. Basically, everything that can be built is being sold. Having said that, when does the money start to get made? Can OpenAI continue to get appreciation of its valuation so that it can pay the bill to AMD and its commitment to Broadcom that it made this week? And I think it can, but the only way this happens is if revenue accelerates. The other side, Roman, I just want to touch on this, is this week you saw deals with OpenAI and Salesforce, Walmart. These were really interesting to me as well, because we're seeing new ways that these applications and platforms can be used to be monetized. It doesn't just come down to consumers. Some of the largest enterprises in the world are looking at how they can use these next generation interfaces, the UIs of the future, to actually create revenue streams for their businesses. So that's one of the upsides. It's got to be in the enterprise.
Well, to that point, I mean, okay, you have all these deals getting signed, and you mentioned that OpenAI revenues need to increase so they can actually meet some of these commitments that they've signed on to. But I guess the ultimate fear, Dan, is that they won't be able to. And now you have all these overlapping deals and the fortunes of these different companies tied closer together than maybe they had been previously.
Yeah, it's a great question. I've had so many conversations with CEOs inside of these companies, from the infrastructure, the OEM companies, the cloud companies, and all of them are incredibly optimistic about the deals, about the demand, about their ability to expand capacity and basically sell whatever it is they can build. Having said that, I think the market, comes back to earnings. The market wants to see this. They want proof points. Some of the proof points we are getting are these deals being signed, but then people are saying, okay, when do the funds flow? When does the companies, the IBMs of the world, the Salesforces who made those announcements start to see meaningful revenue growth? They put out a new number targeting like 9.5%, 10% growth over their next 5 years. Is that enough to keep everyone excited? Can just the Mag 7 and NVIDIA grow enough to basically overcome some of those deficiencies? I think we're going to see it turn, though. I think all this capacity is going to be converted. And one more great hint for everyone out there that is in doubt was TSMC this week. TSMC basically said they expect the AI accelerator market to go at more like 40 to 45%. Now, we had a forecast at $583 billion that was like in the 20% CAGR, and people thought we were on the high end of the market, and that was just a couple of months ago. So we're seeing the demand for these chips accelerating at twice the pace. These companies have a place to put these accelerators. They've got business and applications to use them, and they are going to monetize them. This trend is going 7 times faster than the internet did.
Right. And I hear what you're saying, and the numbers and the projections are pretty stunning to think about. But there's also another fear out there. When you think about the physical infrastructure, there's incredible demand for data centers right now. It's clear that demand is outpacing supply at this moment. But you think about technology getting faster and more efficient, it also tends to get smaller over time, Dan. And I just wonder, what you make of some of the concerns out there that maybe we're literally just overbuilding when it comes to how big some of these projects are.
That is probably one of the biggest question marks. Some of the neo clouds, I know we've talked about CoreWeave quite a few times. They have a multi or 6-year depreciation model. They're buying, tens of billions of dollars worth of infrastructure, and this stuff is going to be upgraded based on NVIDIA and AMD's roadmaps every year. And so as that gets upgraded, they do become more efficient. But we've seen over history that compute doesn't just completely go to waste. What it does is it gets repurposed and it gets utilized for other workloads. But there is going to be some proof that needs to be, shown to the market. That's why sometimes when you see a company like Salesforce make an announcement with OpenAI and the stock goes down, you're like, does the market believe? And so we've got that disconnect right now. I think everybody sees the infrastructure boom and they're piling into these energy names like Cypher Mining and Iris Energy. These are names that I've actually gotten involved in myself because I believe all the capacity that can be built will be sold. But at the same time, out the other end, we need ServiceNows, we need Salesforces, we need these enterprise software companies where we only have about 1% penetration right now to start driving incremental revenue. So you've seen them pivot revenue to AI products, but they're not growing faster than they were before AI. And we need to see them growing faster because of AI.
All right, I hope you're all doing well today and staying calm in this market. Today, Axios is reporting NVIDIA and TSMC unveiling the first US-made Blackwell wafer from TSMC's Arizona facility. Also, a quick reminder of some news that broke yesterday. We learned from Oracle that AI infrastructure margins are in the range of 30 to 40%, which is much better than the 14% that was claimed by the information last week. As I said last week, I have no idea how the information would even have access to those numbers, and I'm hesitant to believe anything the information reports involving NVIDIA and the build-out of AI data centers. Oracle telling us that margins are in the 30 to 40% range is very good news for NVIDIA. This was a very interesting week in the stock market. Earlier in the week, the market started showing signs of recovery following last Friday's sell-off on renewed U.S.-China trade tensions. And then throughout the week, we had more volatility due to the back-and-forth trade situation between the two countries. And then yesterday, we saw many high-flying stocks and risk-on assets get hammered due to credit concerns resurfacing. And then today was a mixed day in a market with small caps finishing the day lower, while the S&P and NASDAQ saw some recovery. Very briefly, I'll mention a couple other stocks in case you missed yesterday's video. I continue to be bullish on MP Materials despite the volatility we've seen this week. MP has been caught up in the volatility surrounding the U.S.-China trade tensions trends, but short-term volatility in the stock does not change the long-term fundamental trajectory of the company. I continue to be bullish on MP over the next 5 to 10 years, as I've discussed in previous videos. You can find those videos posted on the channel homepage if you want to know more. Also, Iron saw some notable red action this past week. As far as I'm aware, there is no negative fundamental news about the company. It seems that Iron has just been tossed about due to volatility in other areas of the market. There was a credit scare in regional banks this past week, as I alluded to earlier, and that caused many of the high-flying stocks to trade lower. Iron has risen a lot over the past few months, and so we need to be prepared for pullbacks. That said, it's important to recognize that Iron has moved higher due to a fundamental change of the business. This is not just another hype stock, and I continue to be bullish on Iron over the next 1 to 2 years. I'm curious to see if we get any announcement from Iron about expanding their GPU fleet in the near future. If you invest in Iron, it's very important to research the company so that you will not be scared out of your position during pullbacks. I am bullish on Iron over the next couple years, and at the same time, I'm sure there will be pullbacks along the way. But short-term volatility in the stock does not change the long-term fundamental trajectory of the company. There's a video of Iron's co-CEO posted on the channel homepage if you want to know more about Iron. Now back to NVIDIA. I'm completely serious when I say that I think most analysts are substantially underestimating NVIDIA's long-term growth. And I also think there's plenty of room for the stock to move higher. As I've mentioned in recent videos, NVIDIA trades at a lower forward multiple than both Costco and Walmart. You heard that right. The most important company in the world is trading at a lower forward multiple than retailers. And NVIDIA's growth moving forward should be substantially greater than both Walmart and Costco's. Why is this important? It means that it's only a matter of time before NVIDIA moves higher. While many in the financial press are hyperventilating about bubbles and complaining about NVIDIA's market cap nearing $5 trillion, NVIDIA has the earnings and the future earnings growth to more than justify its current valuation. It would not surprise me if NVIDIA reaches a $7 trillion market cap within the next 18 months. That would not surprise me at all. It's important to not get distracted by the noise and to instead focus on the long-term trajectory. Keep this in mind the next time you hear someone talking about a bubble. Will certain parts of the AI ecosystem eventually enter bubble territory? Yes, some probably will. But to say that NVIDIA is a bubble, or to say that AI as a whole is a bubble, is missing the point entirely. While there are similarities between this AI revolution and the early days of the internet, there are also fundamental differences in multiple key areas. First, the largest spenders have the deepest corporate balance sheets in the world. Second, the largest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Third, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily to try and meet extremely strong demand from their paying customers. And fourth, new use case development and mass public adoption of the technology are going to happen much faster than they did during the early days of the internet, because the internet is already here, making new use case development and mass public adoption immediately possible. This drastically reduces the risk of long digestion periods and overbuilds of capacity like what we saw during the early days of the internet. Could there eventually be an overbuild of capacity? Sure, it's possible, but I honestly think we are at least 3 to 5 years away from something like that happening if it happens at all. Jensen seems to agree with this, as he recently said on the BG Squared podcast that we should not hit a glut in demand for at least a few years. Additionally, NVIDIA has multiple large growth opportunities on the horizon that they are really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, AI native startups, physical AI, and quantum computing. These additional long-term growth opportunities and the effect that new use case development will have on demand for NVIDIA's products is not being adequately factored into most analysts' long-term estimates. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held, and this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.